Welcome to another video in a series of videos that cover the basics of stock investing. Before we start, please don't get confused between the shareholders' equity and the statement of shareholders' equity. The statement details the changes of the shareholders' equity over a period of time, while the shareholders' equity is the net worth of the company after selling all the company's assets and settling all the liabilities. It is also known as the book value. Some people consider that the shareholders' equity statement is the least important statement among the four financial statements, because the same information that this statement provides is actually provided in the balance sheet and the cash flow statements. So it combines some information from those two different statements. Here is an example of the shareholders' equity statement for Target Corporation. In 2021, the shareholders' equity changed from 500 to 471 million because the company spent 31 million to buy back their stocks, which will decrease the shareholders' equity. At the same time, the company issued stock options worth about 2 million, which will increase the shareholders' equity. In the next video, we will talk about the difference between assets and liabilities. Please subscribe and hit the like button.